So
Okay,
I was just going to go through one thing at a time, right through our list, Roseanne, just to kind of give
okay,
you a background, Crystal. And this is stuff you would have heard when we initially talked, as a
yeah,
from a client point of view, right? So you'll be able to really explain this well to your clients, right? How to shop for a mortgage, what are the differences? So one of the main differences, right? Your client says, "Well, why don't I go to my bank versus why am I going to your team, Crystal?" Did I lose you
yeah.
guys?
Wait a minute, we gotta get this thing off.
Okay.
Wait, got it. Thank you, thank you. Okay, go, we're good. Okay.
So, Crystal, your clients might say, "Well, I went to my bank. What's the difference?" And, Roseanne will tell you the importance of it going with your team. But, just like we did for you, someone can walk into a bank, Chase, Wells Fargo, wherever, and they could have whatever Chase is going to offer. Now, you don't know if you can get that loan at Chase, just this is what they offer. If they approve, then they get the deal, but they don't know if they have the best deal, right? So walking to Chase is just like them doing it themselves. It's them
Yeah,
against Chase, right? Against any bank. That person doesn't work for them. That person works for the bank. So it's like going to buy a car. When you walk into a car lot, it's you against the salesman. The salesman's not there to help you. The salesman is there to help the car lot, right?
yeah,
And this doesn't make it better or worse. These are just the differences. And with us, as we are a wholesale rate shopper. So the client's going to come to us like you did. We're going to get their profile. What's their credit? What's their income? What's their down payment? Who are they? And then we are going to take that across 41 banks across the nation, and we're going to see who will give them the best deal for who they are. This credit score, this down payment, this hiccup in their life of credit, whatever it may be, who will be the best for that?
makes
Yes,
sense. Could you tell her the difference of why because you just said 41
ma'am.
across
Yep.
the nation. She doesn't understand the difference between you and Joe Jones mortgage company.
Yep.
Tell her
Totally.
the difference between a bank, a banker and yeah.
Yep.
Thank you.
So when you like, this is the best way I can explain it, right? So, and
Oh,
people,
wait 1 second. This is how you sell him because this is the truth. Okay.
right. So, and I'm going to just give you this example before I spit out what our differences are, because I think it illustrates it, and everyone gets it really quick when I do this. And if not, I'll explain it a different way.
Mhm.
So, you're going to go buy toilet paper. You have a choice. You're going to go buy it at Costco, or you're going to go buy it at 7-Eleven. The exact same toilet paper, Charmin, you're going to buy it. Where is it cheaper?
Costco.
Okay, you said that pretty quick. Well, how do you know that? Why is it cheaper at Costco? What makes you?
7-Eleven is a convenience store, so they usually are a little bit more expensive because of that convenience that they give.
That is true. Why is Costco just cheaper, period, than most places?
Um, well, because you can get it in bulk too.
That's it. I mean, there's no secret, right? They just buy 200 million rolls of toilet paper from Johnson and Johnson, and 7-Eleven buys 10 million. They just buy more, right? So they get it cheap. It's you don't go in there thinking, what's the catch? Is it real Charmin and Charmin? Is it real Johnson Johnson? Like you just know that you could never buy it at the same price they buy it because they just buy in bulk, right? You get that. You believe that. You trust in that fact of why you go to Costco, right?
Yeah,
So
it's very dangerous to go to Costco.
yeah, so for us, we just do hundreds of millions of dollars in loans with Chase, with a Wells Fargo, with any bank you can go to. Plus, we skip the banks, go straight to, and I'll talk about this in a second, Fannie Mae, Freddie Mac, FHA, the government agencies that I'm going to go into with you. We go straight to them and skip the bank. So, whomever on that day is going to give that deal the best, they're going to give me the deal at a wholesale price versus you or the client at a retail price. So if I have a client that says, "Look, I bank at Chase and they love me and they're going to give me a great deal," I say, "Great. We'll show you how to do that. Follow my instructions, go to Chase, get this document." And all I'm going to do is take the exact document and push some fax numbers and send it into their wholesale side, and I'm going to get it cheaper. I love clients that want to do that because it just shows them what the difference is. You just don't simply have the buying power that we have. They don't, to go to a bank and get it any cheaper. If for some reason they run across a bank that has some deal that is so outstanding, we are still going to always review us as your asset. We are your resource. We're on your team to help your client. I have run across the clients, I would say probably 2 clients a year that will run across and they'll say, I got this deal from my local bank. And I'll be able to check it out and say, all right, that's totally true. I don't know why it's that like that, but take it. You don't have to look any further. We looked at 41 places. We're wholesale. We're huge. And I'm giving you the green. Say yes to that bank. So even then, we don't get the loan, but you get put down for, Crystal's team did the right thing for me. That's the most important thing, because if we can keep Crystal in business, then there will be business for Crystal to give us. If we can't keep Crystal in business, then what good is it? We're not going to meet your clients, right? So that's, as Roseanne was saying, that's the main pitch. You have a team of a resource that's going to be able to guide them. So another way to view us too is, and these are just, I think, parallels to how you view yourself. So you obviously, Roseanne is teaching you the difference of why should they use you versus just going to Redfin on their own. They don't need a realtor. They can do this on their own. They can go to Redfin. And Roseanne is teaching you all the huge benefits of you representing them, a smart realtor who is licensed that knows what they're doing. And you represent them against the other side, right? I mean, you are on their side. Well, we are the same thing. We represent them against all the banks. So the visual I'd like to give you and your clients are you, me, and your client are sitting on one side of the table. On the other side of the table is everyone else. I'm there to make sure they get the best deal at the banks because I have the muscle to push the banks around. You're there to make sure the sellers don't push them around and make sure that they get the best deal and you pay the fair price. But this team you've created for them is going to control protecting them. And like the third thing I'll tell you is, like you, we don't get paid until it closes in the end. So you're going to work for free up front. I'm going to work for free up front. And in the end, if they get what they want, then we all get paid. And I don't even get paid by them. I get paid by the bank based on their loan amount, not based on their rate. So if someone's a do-it-yourselfer, I know better than Crystal, I'm going to go on Redfin, I know better than Tory, I'm going to surf loans online. Okay, if they don't need our services, then okay, they can do it on their own. It would be like going to court. They think it's over a traffic ticket. You may not need a lawyer. But this is like going to court in a lawsuit. You need somebody to protect you. You need the realtor, you need the mortgage guy, you need your own attorney that's part of the team. There's a reason Roseanne's team is so tight because it protects the client all the way around. Did that answer it, Roseanne? That's the main thing you have to learn and the difference of why you'd recommend us.
And especially being a new realtor, this is your time. Everybody's going to pull you. Everybody's going to have an uncle. Because as soon as you come up, all these mortgage companies are going to try to get your business. I'm telling you as your trainer, you need to stick with him. Because if he tells me you're in trouble, then I step in. If he doesn't tell me, he might say to me, she's not understanding, Roseanne. So he'll call me and then I will say, look, this is how it goes.
Yeah.
Okay. Will you tell her about the Spanish realtors? Because a lot of her business is going to be Spanish, and that you have a Spanish person, Lucas.
We have so on my team, depending on like when you come in, right? Like just like you did before, I think you dealt with Ed, right? You guys dealt with Ed. He was on my team, so he pushed the papers, and then you had me and Ed to talk to, and then the team grew, and you had Vicky. So Luca Borghese, who's one of on my team as well. Anyone Spanish speaking will go directly. He'll handle the account. He's completely fluent to read, write Spanish. All our documents now will go out in Spanish. So we are, if you look up anything about our parent company, Cross Country, we are heavily, heavily, heavily dedicated to the Spanish community. So later on, when we start talking about more things, even if we want to start marketing and advertising for you in Spanish or to the Spanish community, where we figure out where you're going to get your business from, we are heavily, heavily supportive of that.
That sounds good.
I even have an app on my phone, but we let Luca do it. If I want to, they have this app, which is pretty awesome. If I want to film a video in complete English, it literally translates my lips and everything to Spanish or any language we want.
That's nice. That's really good.
Which is great. It's a little cumbersome. It's better to speak to Luca because he's on the spot, can talk live. And
But every now and then.
Yeah.
Yep.
you have.
That's
Yep.
perfect. Good.
Absolutely. So that would be one thing to look up about us. Then when we get into marketing stuff, we can show you. One thing I wanted to hit with her really quick too is the difference of how loans work, right? And again, we talked a little bit about it when you did your own, but most loans are either, I view them like a organizational chart, right? At the top is Fannie Mae, Freddie Mac, FHA. Those are the three government agencies that back mortgage loans. Those are the quote unquote good rates, right? So everybody, and we have direct relations with all of them, and then all the banks are under them. Chase, Wells Fargo, we have our own product. So whichever bank's going to give us the best rate, we skip the bank, go straight to Fannie Mae and Freddie Mac, get the approval, and then we just use the bank for nothing. Sorry about that. For nothing other than who they're going to make their payment to for the next 30 years. We don't care where it goes as long as it's the cheapest, right? But those are the three agencies that most people go to. But other types of loans are construction loans, renovation loans, and you don't have to write all, you don't have to like memorize all these. They have what's called non-QM loans, which are not going to the government. They maybe have something strange about them, like the person is self-employed. We have departments that we control everything on in every single type of loan. ITIN would be good for you if you have any ITIN clients, right? If it exists, we not only have it, but it's under our umbrella.
And then what are your requirements for the ITIN, the people with the ITIN?
I'd have to pull that up what the exact ITIN requirements are. But they got to have an ITIN number. The down payment's usually pretty big. That's what usually knocks most people out.
Yeah, I was hearing that too. The down payment would be pretty big, but like document wise, I wasn't sure like what they need like for.
I will get you that list and send it to you.
Yeah.
And I'll even show you like in a marketing piece so you know. But don't. The other thing I try to tell you too about like, let me back up a second about why to use us versus the bank. This is a control thing, right? So let's say your person goes to the bank. This is just something I think you got to be cognizant of as a realtor. And Roseanne, not to get in your lane, but let me know here. I think I can meld the two together. If your person goes, look, and I'm going to Chase, there's nothing you can do about it. You can't convince me otherwise. My sister works at Chase. I'm not going to use your crystal if you keep pushing me. Yeah, got it. Sometimes you just, right, Roseanne? Sometimes you just have to go with who they want and throw in the towel after you've done everything you could. But something you need to understand and how this works is that person at Chase, who's a paper pusher, took the information. Then they mailed it to someone in Minnesota to make a decision. So when you deal with us, they're all employees under me that make these decisions. It's my underwriter, it's my closer, we're not sending them off to somebody else to get an answer.
Yeah.
We make the decision. So when I say these products are ours and these decisions are ours, you're not waiting. We're not what's called a mortgage broker. There's also there's mortgage broker, mortgage banker, and then there's bank, like Chase and all them. Mortgage broker, sorry, Roseanne. Mortgage broker is just someone that takes the information and sends it to banks and hopes the banks will say yes.
Oh, right. You can replay it. But listen.
Right. That's how a broker works. We used to be the biggest broker in Illinois up until about 13 years ago. So I know how we work. They're better than a bank because the rates are better, but you have no control. They just get the paperwork and they send it to Fifth Third. And then we're all waiting. And then Fifth Third comes back and says no. And then they wait and they send it to Chase. And with a mortgage banker, which is what we are, we control everything. The decision comes in, the credit comes in, our employees make the decision to do it, Fannie Mae or Freddie Mac, whatever it is. So we are controlling that decision. And I was just taking you back to another reason to be careful on, hey, I'm not using a bank, that's good. I'm using a broker, so it's the same thing. It's not the same thing.
And he doesn't have as many lines as you do.
Pardon me?
Oh, he doesn't have as many lines. Like
correct. Correct. And they don't have 41 people. They could have 41 people, but let's say they could use Chase or I could use Chase. We both could use Chase in this example. We are going to be we're going to be Costco. They're going to be like the gas station.
Yeah.
Oh,
right.
I lost video.
Yeah. Yeah.
I
We
can't.
can hear you.
Okay, I can't see you guys. Can you see me?
Yes.
Yeah.
Cool,
I
thank
think-
So again, that's just another thing to kind of think of is, there's just no way, there are people that are our size that do have the same abilities as us, but everyone's got their own. Now, one of the thing for your clients is anytime a new client comes in, we are going to run them through our system to check every single down payment option, trust money they can get, free money, whatever it may be, bond money, like what is out there for them. And that might not be what's best for the banks, but it's what's best for the client. So we are going to represent the client. They don't even know maybe to ask if there's down payment money out there. I have a client right now, just to give you an example. So I have a client that was doing a loan in 3 months ago when rates were kind of high. It was a 3-flat building, owner occupied, putting 20% down. The rate was 8% and they had to pay $4,000 to get that rate. But he happened to buy in a certain zip code. We had a special arrangement with Chase that nobody else has, that Chase was giving a rate of 7% in that zip code and no points. And we stacked on with it what's called our community promise, which was another $6,000, right, that he got. Now, separately, I have another client who we were giving $6,000 to. He took that $6,000, the rates were 6.75. He took that free money, bought the rate down, and got 6.1 on a 30-year fix. That's unheard of. Like, you're not even going to see that in the papers right now.
And you can't possibly know that. That's why you
Right.
turn it over to him.
Yeah.
And finds out what program you're going to sell him on.
Right. I mean, I could be here for months telling you everything, but if you just, like I was saying, if you just have the gist of, if you want to know your best deal, call my team. They'll give you the information, and you're not, pressured into using them no matter what. One of those.
One more thing.
Yeah.
And then you can't take your client out and show them houses because you don't even know what you're going to write.
Yeah.
Right? I mean, isn't
That's
it kind
what
of
we
makes
did
sense?
too.
Right.
It makes it better because I already bought the house. I kind of know how it is, like how you
Right.
made us say, okay, well, before or after our interview, you told me to apply with Tory. I talked to Tory,
And he
And
would
Ed,
pull one of
yeah.
these programs for you. Right.
and then we waited to see what we got approved for, what our rate would be, and then
And
we
that
went
was
to
our
the-
guide.
Yeah.
Yeah. Right. Okay, Tor.
And I think you have a great thing to tell your clients. This is who I recommend because this is who I used, right? Not only do I recommend them, but I can tell you exactly as a buyer how it worked with them because this is who I used, right?
Yeah.
You're just really recommending me because you can trust the fact that you know what you're getting for these clients, not because your work told you to or because something different, right?
Well, I have to teach her how to create the team,
Yeah, totally.
part of the team.
Yep.
You know what I mean?
Yeah, absolutely.
The most important guy in your whole team.
I was going to go to pre-approval versus pre-qualification, if you think, Roseanne, because that's like really hot now due to how.
Yeah.
Okay.
Yeah.
So there are someone can get what's called a pre-qualification, or someone can get what's called a pre-approval. Let me share my screen really quick.
We're here.
Yep, no, give me a sec. I'm going to share my screen so you can see what I'm looking at. Let me know when you can see my screen.
Yeah.
Okay.
Yeah.
Okay. So, and I can forward this to you too, Tay. So they have, pardon?
Yes. Yeah.
So there are pre-qualifications and there are pre-approvals. Okay. Now nowadays, and Roseanne, I'm going to talk a little, probably in your lane here. So, correct me if I'm wrong or any of it's not clear. Nowadays, what we are seeing is people going to find, Roseanne's right. For you taking someone out to even see, you want to see if they're able to get this. But we're seeing that there's so much competition right now for houses that if you walk in with a client that's not 100% ready, we're watching sellers pass on those offers because your client is not as strong as the next client, right?
Yeah.
So a pre-qualified client, they provide a ballpark estimate about how much we can borrow. It doesn't hold as much weight. It does not include a credit report check. it's really like if you've seen the TV shows on Rocket Mortgage, push button, get mortgage. If your client called me and said, I make $1 million a year, I have an 800 credit score, I have $10 million in the bank, how much can I be pre approved for? I would say, based on those things, you could buy a $6 million house. And that's what that pre approval is going to say. And I'm going to show you a copy of one. That is very weak. That doesn't say anything. Now, conversely, like we did for you, this is the borrower receives a conditional written commitment for an exact loan amount after being pre-approved. It speeds up the buying process. It requires the completion of an application and all the documents. So a pre-approval, like we did with you, says, we have checked the credit, we have checked the income, we have checked the assets, and we have run it through an underwriting engine. It is as far as it could possibly get. This is how serious these buyers are, and this is how sure we are of this answer. Because we verified everything they told us. All that has happened, right? And so when you are, I'm going to wait for Roseanne to come back at this part because I want to show you guys together to make sure we're seeing the same thing. But the importance of making sure your borrower knows that they need to be pre-approved to this level makes them stronger. Does
Yeah,
that make
Yeah,
sense?
the pre-qualified is not as strong as the pre-approved, so then they could be looked over.
Absolutely, without a doubt, because as I'm showing you these examples, think about if it was your listing. Hey, Roseanne, I'm going to show her an example of like a pre-approval and a pre-qualification and how the differences are, so different. And I was telling her, think about it if it was your listing, right? Which one would you feel is stronger, right? So here, let me get this. Where am I here?
People won't even look at the offer.
Yeah.
You've got a pre-qual.
Okay, so let's do.
You've got a,
Here's an example, and this also kind of moves into. Can you guys see my screen?
yeah,
Okay, let me share two things about this. Is an exact story that just happened, right?
okay.
Yeah. What was that, Roseanne?
It says February 5th. Yeah.
This is a great example, and this is a great story that just happened. Realtor called me last week. I have a client coming in from Ann Arbor, Michigan, wants to buy a place. They have their lender at Ann Arbor, and their lender knows all, and they're God, and they're cool, and they don't need you. I'm like, okay, cool. Oh, but wait a minute. They need to know all about how LLCs work and financing. So on one hand, it's like, why am I doing all this work if I'm not getting the loan? The answer is because that realtor, I'm there to support her and what she needed to get this deal done. So I talked to their client at 6 o'clock on a Thursday night to 7:30 when their bank was closed. So they didn't get their banker at 6:30 and 7. They got me. We gave them all this great information, stuff they didn't know, stuff they didn't go. They were crazy impressed. Everything was super happy. And I even said, if you're thinking you're going to buy a place, you really got to get ahead of this, because if you find a place you love and you're behind the 8 ball, you're going to lose it. Yeah, no, I got it. Don't worry about it. Thank you for your time. Realtor tells me on the down low they're still going with their Michigan person. I'm sorry, thanks. I tell the realtor, hey, thanks for putting me in the mix. Thanks for giving me the attempt. We don't win them all, no problem. So Monday morning comes. Realtor calls me. Can you call Alicia back? She's ready to shop a mortgage. I'm like, what are you talking about? She came in town on Sunday and made an offer. But she didn't have, but she could, but so she made an offer, did not have a pre-approval because where was her bank on Sunday at 6? Not working.
Oh.
No pre-approval. She makes an offer without a pre-approval. 6 other offers come in same night, strong pre-approvals. Realtor begs just to wait till the bank opens on Monday morning to get the pre-approval. And here's what they got. So I'm going to show you this. Congratulations. Based on and what I want you to pay attention to in most of these, and I say it's called teaching realtors to read the whole document. Usually the first sentence is when everyone stops reading. Congratulations, based on a review of financial information, credit history, you're pre-approved for a loan to purchase this loan on this property for this amount. You stop reading. They must be good because Bank of Ann Arbor says so. Keep reading. All of the information is subject to verification, which means they didn't look at anything. They didn't look at the income. They didn't look at the assets. They do not know if this person can buy or not. They clearly are telling you they haven't looked at anything. This pre-approval letter does not constitute an approval or a commitment to rate, fees, or terms. This tells you right here that this isn't worth the paper it's written on. Does that make sense? So when the person got it the next day, do you think these people won the house?
No.
They were passed right over. If they would have done the pre-approval with us the night that we told them on Thursday and Friday, and this would have come on Sunday, and they would have called us at 6, we would have sent them the right pre-approval, and they would have had a chance to buy this house.
But pre-approvals sometimes can't be gotten in 24 hours.
Correct. Like I told her, it will take us, right? Because that has to do with you giving, just like you did, Crystal. We need, like I told her, we need 20 minutes on the phone, and then we need how fast you'll get us these documents. You know, so they control how fast. Let me show you one now, what it would have looked like, what a strong one looks like. I mean, it's so funny. I just got this one in right before our class because there couldn't be a better example of a absolutely pre-qualification that means nothing. Like literally, that's like the greatest example.
So if they say they went to another lender, ask them for the letter.
Yep, totally. Because when you get this letter, right, you want me to help you with this. So I could be like, look, this is what this means. I'm going to have you call this realtor or this loan officer and tell them these things. I will help you with those when you're stuck. Just call me and I'll explain what this means, why it's a problem, and what questions you need to ask to protect your borrower. I can't see you guys again. Can you see me still?
Yes.
We can see you.
And we can see the pre-approval letter.
Okay, cool. So here's a better example of what one looks like, right? Where are we at here? We've reviewed your credit scores, and we have results from the automated underwriting system. And normally there'll be another dot here that says we have looked at your income and assets. Right? The only thing I need, and you could never have this before a pre-approval, is a fully executed sales contract, an appraisal, condo insurance, and like these things that we need to move forward. You can never get those until you actually have a home and a deal in place. But everything else is signed off on.
Right. They looked at their income, they looked at their their assets, everything.
Everything.
And their debt.
Yeah. Anything that will, I know this guy can buy this place at 685, put zero money down on this VA deal. And I know, so if he gets it and wins it, I know it's going to close. This other deal, if she would have won it, then they're going to find out if they can do it. And that's how loans get denied in the middle. And it's bad for the borrower, but it's her own bank. It's on her. But for the realtor, it was a complete waste of your time.
Yeah.
Does that kind of make sense on the difference?
Down somebody that you just didn't waste a week of your time because that realtor invested all that time showing that property and showing for nothing. No paycheck.
Yep.
Right? No paycheck.
All right. Any other questions on pre-approval versus pre-qualification?
No, you made it very simple to understand.
Okay. Something else people will ask a lot is, oh, my credit this, my credit that. Like, they have to understand and this is just, again, the differences. If you just know the surface of it, I'm going to do most of it, right? Credit. Everyone says, I don't want my credit pulled because I don't want my scores to get lowered, right? Everyone says that. So the important part about knowing that's a true statement. But let's move back. When a bank pulls your credit, you lose the most amount of points. Okay, 5 to 7. No one knows how much. The credit bureaus won't tell anyone, but that's pretty close. 5 to 7 points. Because when you get pulled at Chase. The credit bureaus don't know, are you going to get a boat loan, a car loan, a student loan, a mortgage loan, a line of credit, a personal loan, a motorcycle loan, a snowmobile loan, a credit card? They don't know what you're going to get. So they're like, they could get all those, right? You could get a snowmobile loan. I mean, so they pull them down 7%, 7 points, 5 to 7 points. When a company like ours pulls the credit, it's closer to 3 points, and it could be 3 to 4. I don't like hang our hat on 3, but it's less. It's almost half. because the bureaus know they are shopping with Tory to get a mortgage only, and his job is to take this credit and go use it at all 41 banks.
Yeah.
Right? So no matter what, if you want to know where someone stands, there has to be a credit report. Without it, you don't know if we can help them or not. But why, but if they went to Chase -7, and they said, I don't like Chase, I went to PNC -7. And then they said, I don't like PNC's rate, I'm now going to go to Wells Fargo -7. They just dropped 21 points off their credit score just because
Yeah.
they shop around. And I understand they want to shop, but do they know that the way they're doing it is crushing them? Better to get my credit in what we have and what we see, and I say, this is your profile. Now, if you want to go call 1,000 places, go for it. This is what you know. Don't let them pull your credit. This is what you have. And even in addition to that, that's the difference of why pulling it at a bank is more dangerous than pulling it with us. Those are just the differences, right?
That makes you better than anybody else.
Right. But there's also a hard pull and a soft pull. So if you get someone really, really nervous, I don't want a hard pull, which like hits the 3 points, which is 100% accurate. I want to do a soft pull, which doesn't give you a credit score and roughly tells their debt.
Okay.
I can do that. However, if you're only allowing me, let's back up to the pre-approval and the pre-qual. If all you'll do is tell me your stuff verbally and you won't give me anything to prove it, you have to get the bad pre-approval. You have to get the one that says what theirs says. But if you want an accurate information, you have to give me information. So it's funny that that lady I told you that I went there on Monday, she hated the rate that bank gave her, right? So moving on the next place, she's like, I think I'm going to use you. I want to get a better rate. I want to shop around. I want to do this. I said, great. I talked to her for an hour. The second Luca got on the phone with her, and Luca's like, okay, we need your name, your social security. She's like, no, I'm not giving you any of that.
Well,
Okay, so we're back to I can't help you. No, I'm not going to give you any of that. I'm staying with my bank. Okay. I mean, her bank's still going to know that. Like, that's just, there's nothing we can do to help the person that won't give us what we need. But we
Yeah.
do this soft pull on the person that's super nervous. So if I did a soft pull with a pre-approval, and let's say they gave me their income, their assets, everything, but they only gave me the soft pull, I would say the information you're getting is about 80% accurate for their pre-approval. Still could change. So if they want to count all their blessings on that and then make the offer and then come and then I get the rest of the info and then we see there's a problem and the deal dies, they won't be surprised. They could have avoided that, right? But credit is a big thing, right? Understanding how it works and understanding when it will hurt and when it won't. If they had a 600 score and I pulled it, it's going to go down 3 points into the 500s. Is that a problem? No, because we do loans all the way down to 550 credit score.
I
And
have
that's
a question.
yeah, sure, go ahead.
Oh, you said if somebody goes to banks and bank, for every bank that they look at, their credit goes down those 7 points, correct?
5 to
If they-
7, yes.
I think credit, yeah. But if they go through you, they only go through 3 points. How is it that with you it's only 3 points if you're doing the same thing, shopping through banks, and them is doing multiple? Is it
That's a
because
great question. Because when they went to Chase, right, the credit bureau said this person pulled their credit at Chase. They could get a boat loan, a car loan, a student loan, a snowmobile loan. They could get all these loans, right? And then they can drive to Wells Fargo and they applied. There, they can get a boat loan, a car loan, a student loan, right? Each of these banks they go to could offer 10 different loans and no one knows what's going to happen. And so why this, maybe this will help understand why this came into place is because back in the day when people were committing fraud and the big meltdown happened, a person would go to Chase in the morning and apply for like a boat loan and a car loan and a mortgage. Then they would go to Wells Fargo 10 minutes after that and apply for the same 3 things. And they were getting, because the banks weren't talking to each other, they were getting loans at all places. But these, when you're 4 or 5 banks down the line, you're not considering the loans they're getting here that is ruining what they can afford. So people would churn this, get all this money, and the banks would get screwed.
Yeah.
And the banks aren't going to tell each other, oh, this guy is applying for me, guys, be careful. So the bureaus are like, all right, we're going to lower you 5 to 7 points each time you go to someone like that. Because by the time they go to Chase in the morning and lose 5 points, and then they go to PNC and they're down 10 points, maybe that won't work. But when you start getting the banks 3 and 4 and their credit score starts going 10, 20, 30 points down, that's going to stop them from fraudulently getting more loans, more banks. Right? And with us, there is only one thing they can be getting. We are only a company that gives one thing, a mortgage, which is why the bureaus say we're going to hit companies like that less points. Because we know not only does this company shopping for a mortgage, but we also know they're going to take this every lender, Chase, all them, they take the one credit report I have and they use that. They don't require me to re-pull their credit report. They will take ours as though it's Bible. So it's one credit report gets shown to 41 different people.
Tory, I have a question. She's gonna get. If someone has charge cards open and they have high limits, let's say $10,000, $20,000, how does that hit their credit? Are they, how does that apply?
So it could or it couldn't be. So let me give you the whole what's in all the soup, and that's an ingredient in the soup, right? So
Yeah.
your mortgage is based off, I'm sorry, your credit is based off of all this data, right? And they take all this data and they meld it together and they come up with this magic number, right? And this program or this formula is not something that is known to anyone. It's a secret formula like the Coca-Cola. They don't disclose it. But things that hurt your credit, okay, are things like when your credit is maxed out. Like you have a $500 credit card and you owe 500. I know it's not what you're asking, Roseanne, but I'm getting into it, right? You have a car loan that is you borrowed 30,000 and you still owe 30,000, right? You have so if your credit is all maxed out, that is one thing that hurts the score. As you pay it down over time, right? Like as a credit card has 500 limit, but you're at 250, those are
Yeah.
really good points. You're at 50% of the utilization. And this is where Roseanne's question is going about the utilization. And so having them maxed out, bad points, lowers your score. Having good utilization of like 50% or less, right? Like charging it up 50%, charging it off, charging it off 50%, charging it off. Good utilization, great points. That adds good points, right?
You get, go ahead.
Showing responsibility, right? Now,
What if an open card with no balance?
right. So now I'll get to that. One of the other things, and I'm not answering it for a reason. It's because where that comes in is going to be relevant. So then it's about how many trade lines you have too, right? You want to have 3 to 4 trade lines used well. That makes your credit the strongest, right? So another thing is having too many trade lines, right? So if you had a bunch of stuff like, oh, I had a Gap card and I had a Victoria's Secret card and I had a Sears card and I had all these cards I opened up at the Hawks game because they gave me a free t-shirt and none of them are being used, right? But now you have 8 credit lines. In this example, you have 8 credit lines.
Yeah.
4 of them are being used really well. But these other ones are at a zero balance, right? Which is Roseanne's question.
Right.
It depends on how big those balances are. Let's say, for an example, you had 4 cards that each had a $500 limit and you had no balance on them. Well, that would hurt your credit a little bit because you had 50% of your credit, right? 4 of these trade lines versus the 4. 50% of your credit is not being utilized. But it's only $2,000 of trouble you can get into. So I don't think it's really hurting the scores because all this good is so good. This little bad isn't really hurting the scores. Now let's take Roseanne's suggestion and have 4 credit cards over here that each had a $10,000 limit and you were at 0. Now, overnight, 50% of your credit, you can go into debt $40,000 overnight to go from 0 to 40 grand. Leaving those open leaves a much, much, much bigger problem that can happen. So they are going to lower your score as a result of that, just so you are careful about doing that. So it could hurt you It just depends on how many. If you had one credit card with a $500 balance out of 5 that was open, probably wouldn't hurt you because of all those other things I said, Roseanne. There was so much good that the fact of having an open line, one little small one, wouldn't hurt. But in our other example, where 50% of the stuff was good and 50% of the stuff was open to the tune of 40,000, that would hurt because this is much more of a risk. If this was all at 2,000 in total, the risk would be lower, the score wouldn't really be hurt, and we'd be able to see.
How you would understand this is somebody could go out and put cash in banks and be $40,000 in debt in 24 hours. You know what I'm saying? You see what I'm saying? So there's where the risk comes in. But you don't have to know all that. You just need to
I
go
mean,
to
that's
Tory.
good to know too, like.
Well, for personally, right. And that's how you get, like, Tory, and you say, you know, are you gonna do a credit? Or,
Yeah.
you know, and sit and do that class and find out what makes it work, what makes it doesn't work. So you give that information to your clients because a lot of times you have to build a credit for them
Yeah.
and then buy. Because you can't bring Tory a 420, nobody's gonna give him a mortgage.
Yeah.
And the other thing too is if someone's worried about their credit, a lot of people try to self-diagnose. I have bad credit, I can't buy. They don't
Yeah.
know. They don't know what that means. But if we pull their credit, we have tools that look and say, okay, what would it take to get your credit better? You'd have to pay these off. Let's shut down that card Roseanne spoke to that had an unnecessary balance on it. Like, it will give us the plan to tell them how to get their credit better. So still they should come to us. Yes.
This is like a personal question. So like back in the day, me and Jimmy were trying to figure out like how to get our credit better and everything. Watch videos about credit cards because we would do like the bad thing we used is we had like a limit of like a 5,000, but we would only put like 200 and then pay it off right away instead of like utilizing more of it. And we thought that was good, but it wasn't. Obviously,
Yeah,
we
that's
learned that we could put more in and pay it off and it's better. But what about what you just said, like closing credit cards? Is that
Well,
bad?
Well, it just depends. If you let's say you just had three, let's say you just had 3 loans. You had a car loan and 2 credit cards, and you never spent on these credit cards ever. If you
Yeah.
close those and you only give yourself 1 trade line, that's bad,
Mm.
right? Let's say you had 4 trade lines: a car, a credit card, a student loan, and a credit card, right? That you use, and then you had 4 more credit cards over here that you never use ever. You would want to shut these down because they're not giving any positive points. They're only giving negative points. Let's get rid of those. Let's leave open the 4 good things that are giving us good points. So each
And-
trade line gives good or bad points. It depends on what the spread is between the utilization. It depends on how old it is. It depends on if there was any lates. It depends on the strength, right? Like a car payment is weighted heavier, better points when you pay that on time than when you pay a credit card on time. So it's a formula of like, do you have at least 4 trade lines? Are some of them old? Are they under 50% utilization? Like there's a whole stack of things that go into that answer, right? Should I shut down ones I don't use? I don't know. What's the rest of the profile look like? If you only had 3 and you were going to shut down 2, no, that would be a mistake,
And
right?
that would be, here's what you would do. I would turn my client over to Tory, like you, and he would have a private conversation as to how to build that credit. You would have a conversation. He has your file. And because you can't possibly, remember one thing, always refer to Tory. Don't ever try, somebody else say to you, well, I have a bankruptcy. I have an expert on that. Tory,
Yeah.
Tory. That's what, and whenever you want to know something like, I'm not teaching it to you, and it's in finance, you call Tory and say, could I have a half an hour? Can you help me? And he will do it. Right, Tory?
Absolutely.
Right?
Yes. You set them up. We are your resource to help you.
He will help you personally. He will
Yeah.
help your client. As long as you don't call in the middle of the day and say,
Yeah.
hey, I'm going to take up an hour of your time. No,
Yeah.
it doesn't work like that. You know,
It's hard for us to be on call because like right now I'm doing this, right? And there are people calling me needing my time right now. You heard my phone ringing in the background. They know
Yeah.
they need to wait till I free up, or they can call Ed or Luca if there's somebody else assigned, but it's always start with me so you don't have to guess.
When you said you have classes,
Sometimes he'll do plays.
when
Right.
do you have classes and how do I know that you have classes?
Me.
You.
Yeah, keep going out.
I'm sorry, what was that question?
She like classes like when I owned the company and I had classes, remember you used to do a
Yeah.
credit, do
Yeah.
a time buyer and stuff like that, you know. But if he's not running it and we need it now, you can kind of formulate your questions, have a personal contact with Tory. He'll do it. Yeah.
And then when Roseanne is ready, a lot of the realtors I schedule and I meet with them every week or every 2 weeks for 30 minutes, right?
Yeah.
You know, where Roseanne says you're ready. And I'll be honest, half of the office I meet with an hour a week. The other half of the office doesn't take me up on it. You know what I mean?
Yeah.
So it's
How-
yeah,
What you know, you could schedule time with him, and that would be how you gain knowledge to
Yeah.
speak to your client.
Right.
Never to a client, ever, when they say, well, I have a bankruptcy, don't get into that, because what the knowledge that he has, we could never have.
Yeah.
We need to know to get our people to an expert who knows it. We could never know. That's not our territory. That's his
That's all we
territory.
have.
He doesn't have, right, he doesn't have real estate experience.
Right.
We have enough common sense to know, I don't know.
Yeah.
Then you go to him.
and vice versa. If you and me are talking weekly and something came up, hey, I had a client that did this and I know it's in the real estate lane, I'm going to say, hey, this is a Peter Roseanne question, you know, wherever you're at in your training, you know, not that I don't want to answer it for you and not that I haven't done enough loans to do it, but I'm not a licensed realtor. I'm like Roseanne. There's a reason I team up with people that know better than me. I don't have to know it because I'm not going to know it ever. Right. So, you know, we each kind of do our own lane. She's right. But, you know, I think it's important for the new ones to, you know, I would say, Roseanne, I don't know if you'd agree with this, but a lot of the new people that have done this, that we did the weeklies, right? The DJs, the Sam Seminos, you know, those are the people who are doing pretty well now that are,
Yeah.
they're people that will commit, you know, if you can't commit 30 minutes a week or 30 minutes every other week, I mean, that's fine too. But if you can't commit at least 30 minutes every other week to your career, then that's, you know, that's why some people, right, Roseanne, look around the office and say, why is this guy killing it and this person is not?
Right.
Yeah.
Well, you know, that's kind of like you and me, you know, if you give people tools and they choose not to use them, they can't say they didn't get training or they didn't get tools or they just didn't use them.
Yeah.
I mean, you know, it's simple as that. The world today gives you access to everyone. And if you don't go for it, it's your fault, you know, right? I mean,
it's very one-on-one instead of like, this is a broad class that's focused just to you because the topics the other realtors don't need. And yes, you know, when I met last week with everyone, I talk about these broad topics. But when we meet individually, we're going to talk about what you need because you need different than Amabel needs different than DJ needs different than everyone needs something different than Roseanne. What we talk about, like it's very specific to what you need because we need you to get traction and gain success and earn your loyalty to be your lender. Like that's kind of what's in it for us.
right. And like that program that he just put out. Okay. Well, first of all, the program that you put out, right, on Friday or whenever Thursday that you talked about. Okay. That's for realtors that use him. That is a courtesy of you're trying to give him business. Now, if you were doing 90% with somebody else and you think you're going to go use that, no, you're not going to go use it. I would stop. You know what I'm saying? And he'll say, well, you don't give me your business, I'm not gonna,
Yeah.
you know what I'm saying? So keep that in your mind too. But I mean, I know you're gonna, but you understand what I'm trying to say. But that program, that's your key to marketing. That's your key. I even signed up for it. And you know, right? The program that you gave me. I mean, I think it's phenomenal. All assets of it, no, I'm not gonna use everything, but I'm gonna use a portion of it, right? And if you don't know about it, so then you email Tory, hey, can I have a half an hour of your time? I wanna specify, you know, but you have to go through it, figure out what you want. Don't let him do it for you.
Yeah.
You have to do the background. Okay, sorry.
Once we have no, and that's a good point. Once we have like a meeting, we're going to see like where you're like, I was on with Sam Semino this morning, right? We found out from him where his business came from since he's been doing a realtor, and we separated it and came up with a plan of how's he going to get more friends and family? How's he going to get more floor calls? and how's he going to get more realtor spillover that he got. And so these tools that I give, we're going to focus them so he doesn't have to learn them because they're so vast, and say, and even yours, Roseanne, you're like, I liked this thing. I like the EDDM. Just talk to me about that. Forget all that other stuff that gets overwhelming, and we will walk Roseanne through it so it doesn't become cumbersome. And there, and keep in mind too that before you get on your feet, a lot of people say, like, I don't use Tory because I haven't given him anything yet. Well, it's got to start somewhere. So if you're committed to us and I'm committed to you and we support you and we can get you on your feet and get you deals, well, that's what it's going to take for you to bring me deals, right? So don't say, well, I can only use them when I'm giving him stuff. That's the wrong order. That's chicken and egg. Now, conversely, right, when you have stuff coming in, and I've had this in a lot of offices, and Roseanne's always really good about this. Hey, I've been giving for 8 months. I'm not getting. It's going elsewhere. The relationship isn't balanced, and we either try to balance the relationship, which we've done with some people, or we've just cut the relationship because it's not going to balance, right? So, and keep in mind too, and I kind of tell everyone like about doing business with us, we don't want to date anyone that doesn't want to date us.
That's right.
So the ones that are committed to us, I need to spend time with them. And if you are one of those people, I'm going to spend time with you, and I'm not going to let that get cut out by anyone else. And that's what Roseanne and Pete back us to do, right? Is to you back the people in our office that are dedicated to this team, right? But it's got to start somewhere, right? It's going to be me giving you a lot more than you're giving me up front. But look at it this way: you've already been a client of ours. So if you feel like, you're not giving me any real estate business, you already did. So it's time for us to give and get you up and running, right?
Okay,
Right,
thank
right.
you.
Don't convolute the two. Some people get gun shy about that, but it's once you're up and running, and it's once your intention, and a lot of it's about intention. If your intention is to always call someone else about the loan, but always call me because I'll make the call at 6 a.m. on a Friday or whatever, then yeah, that's advantageous. No one wants to be in a relationship like that.
Right.
Yeah,
Your CRM is awesome. I looked at it, the CRM.
Yeah.
It's on that program, you should use it. Free. The CRM and the marketing program, absolutely. And stuff for your listing buyer's packet and your listing presentation. He's got phenomenal stuff.
And we're able to walk you through and what you needed. Like some of the realtors are like, look, I don't know how to do this. Like, get on the phone with me and walk me through it. And other realtors are like, look, I want to do it at 8 a.m. on a Sunday, and I don't want to call you, and I want control to do it myself. That's what's really good about this program, is it's either or.
Yeah.
Right.
Okay.
So this fit you.
Okay.
I don't know. That I was going to leave kind of the end for some questions here. Is there anything else maybe that I didn't cover? I wasn't going to really get into loan estimate and all that stuff unless you really want me to. I think that's a little deeper.
Yeah, no, that's fine. That's fine.
We started talking about the social media and the marketing that you just did. I think that's when you give me the green that she's ready to have like a one-on-one, or if you want to be in as well, I would say that's a dedicated meeting to talk about her business. Where is it going? Get her signed up for the total expert, talk about what her layout would look like. I think that's a second one versus here, if you agree.
Can you talk to her about the difference between conventional and FHA?
Yes. So the government agencies, right? Fannie Mae and Freddie Mac, those are two government agencies, and those are called conventional loans.
okay,
Then there's FHA, and those are called FHA loans, right? So two conventional types, one FHA type. And they're all government backed, so they're all good rates. They just come with different needs, right? So a conventional loan is usually someone with a very high credit score, good down payment, good debt ratio, good assets. Because every loan has to have credit, income, assets, right? That's kind of what every loan is made up of. Now, FHA, they allow for your credit to be a little less. Like whether you have a 600 credit score or you have a 750 credit score, FHA is the same rate. They treat everyone the same. They don't penalize you on credit score. Conventional does penalize people on credit score. Lower score, higher rate.
okay,
FHA allows for there being more hair on the loan. My credit score is really not that great. I don't have any reserves. I only have my minimum down of 3.5%. I don't have any money in the bank afterwards. My debt ratio is really high. It's above 45%. Like FHA gives someone way more latitude to get into a house.
Okay,
Conventional is like the super A plus, like sharp guys, like, there's no stone unturned. But when someone comes into us, we're going to take their whole story and run them everywhere and say, all right, well, here's the scoop. If you want to put less down and afford more house, we have to go FHA. But if you want to put more down and afford less house and have a lower rate, we'll go, we're going to figure out what car to put them in. But the
okay,
difference between all the things are just what one doesn't have, the other has, right? This guy penalizes you on credit, this guy doesn't. This guy wants you to have reserves after you close so many months in the bank. FHA doesn't. So FHA is more lenient. It approves more borrowers.
Okay, sounds
And
good.
one last thing to let you know on FHA, it's a good point, Roseanne. I'm glad you brought that up. So FHA, right? That's the government agency, right? So FHA doesn't have any guidelines. Like FHA says you could do a loan with zero credit score if you want. But all the banks under FHA, everyone, us, Chase, everyone that's writing FHA loans, you have to have your own limitations in there. Your own. So, for an example, Wells Fargo says we are not writing any FHA loans for anyone that doesn't have a 660 score, period. So, if you have a client that says, oh, I can't do FHA because I got denied by Wells Fargo FHA. And if the reason they got denied is because their credit score was a 659, right? That's not true. I got 30 lenders that will do that loan at 659. So a particular lender that they go to that says they're denied, like one lender, right? A Chase or a Wells Fargo, just one place, one entity. Just because they said they went there and got denied, that's where they got to go to your team because I'm going to be able to tell them, will Chase do it? Will Wells Fargo do it? Will PNC do it? Will places you can't even name do it? Who will, will everyone do it? Is there any home from them? And sometimes out of 41, there's just two places that will do it only. And it is what it is, right? Like I-10, there's only two places that are going to do it. There's not a 41, there's just two places doing I-10. Then we just compare those two and go with whose rate is better.
Got it.
So yeah, the biggest thing is don't let someone self-diagnose. I can't get it. My credit's bad. I don't make enough money. I don't have enough savings. They don't know that. You know what I mean? I always tell someone, what makes you say that? Like, you don't know that to be true. I don't feel good. My stomach hurts. You can't self-diagnose. You're not a doctor. You got to let someone that knows know. But
Right.
when we get done, they're going to know with 100% certainty. Hanging up and calling, when I tell them you are stuck, you can't go Fannie Mae or Freddie Mac, and you have to do this, and here's why it's not working, here's what you have to fix, hanging up from me and calling Chase will not change that. Because I am telling them from every bank how it works.
Tory, can you talk to her about the rate? And sometimes they'll have a lower rate, but they'll charge more origination. Yeah, I think that's important for you.
So every bank, including us, wherever we go, what lender, points and rate have an inverse relationship. So most people, when you pay points, that's like 1% of the loan amount. So if you're borrowing 200,000, 1 point would be 2,000. If you're borrowing 300,000, 1 point would be 3,000. So the more fees you'll give the bank up front, the lower they'll make your rate, right? The more money you give them, the lower they make your rate because you're buying the rate down with money. You're giving them cash today for a lower rate in the future. And conversely, the less fees you pay, right? And let's say the bank's going to start giving you money, giving you credits to close. If the bank gives you money, it pushes the rate higher, right? More fees, lower rate. Less fees, higher rate. Every bank anywhere in the world does not change who you call. The question is, if someone wants to pay fees to lower rate, we got to find who's the best there. Who's going to give them the most bang for their buck? Which of the 41 people are going to take the least amount of money and give them the best conversion of that? And vice versa. If they need money for closing, which bank is going to give them the most amount of money and keep their rate not as high and keep their rate from pushing up as much? right? One guy may say, give me 3,000, I'll give you 6%. Another guy may say, give me 3,000, I'll give you 5.8%. We want to find that. Or conversely, one guy might say, I'll give you 3,000, but the rate is 7. Someone else might say, I give you 3,000, but the rate is 6.6. We got to find that guy, right? Who's the best bang for the buck?
Okay. Good.
So when someone says, "Oh yeah, I looked online, the rate was nothing. It was so cheap." Yeah, but you are paying $4,000 to get it. Okay. If you want to pay $4,000, we'll find the guy that will be the best deal at 4,000.
Right. They don't, they don't see all.
And I'll get realtors that will call me. Like I literally had this back to back. Two different realtors just sent me a text yesterday. It said, "I have a client that said this to me. I don't know how to answer it." And what they said is, "I don't want to buy right now. Interest rates are skyrocketing." That's what their client said. Couldn't be any further from the truth. Rates just came down again yesterday. Rates have been doing nothing but coming down. But he didn't know how to answer that. So I called him and I said, well, here's how you answer that. And here's what's going on. And let me send you some pieces so you can send it to your client and just say, hey, here's some food for thought. Not trying to press you, but you're kind of misinformed.
Yes.
Right. And then that worked. And another realtor said, my brother-in-law said there's no way he can buy with these astronomical rates. And I said, okay, let's go into the astronomical thing. And I sent it. And the borrower said, well, yeah, but I have 2 now. And we said, oh, so is that what you're waiting for? Is the interest rate to be 2? Otherwise, everything else is astronomical? He's like, yeah. I told the realtor, there's nothing to do. There's nothing to do. There's no conversation to have. The rates are never going to be 2 again, ever in the history of this.
Yeah.
This guy isn't misinformed. He's just not willing to leave his 2%.
Yeah,
The other person was misinformed, thinking rates were skyrocketing. So when something runs across and you're unsure how to answer it, those are just 2 examples of one worked out and one didn't. But we got to the bottom with the realtor of, is this a viable person or a non-viable person? Right? My second one's not going to chase the person down anymore.
yeah.
The rate's never 2. He doesn't want to ever buy. So you're done. The other person's going to keep giving, that's it.
Hey.
Right?
Right.
I think a lot of it is about understanding, like, can you help the borrower or can't you? Right? Like, are they reasonable? Are they going to burn your time, or are you going to, we try to help you with that too.
Okay.
That help?
I think we got it.
I know that was a lot really fast, Crystal. I don't know if you caught.
Oh, you recorded it. You
Yeah.
can play it back, right?